Did you know there are only 4 ways to make money? Not 40, not 400, just 4. Most of us are surely familiar with Robert Kiyosaki book Rich Dad, Poor Dad. Most people are unaware that Robert Kiyosaki wrote Rich Dad, Poor Dad Part 2, The Flow of Cash Quadrant. It divides the 4 major types of income, what he named the Cashflow Quadrant, how they operate, and explain this that why the wealthy continue to accumulate more wealth. 3 elements comprise each category: attitude, financial flow, and taxes. E quadrant. The first quadrant is the employee quadrant, where most people begin to develop their mental models of the world. The E quadrant emphasizes employment advantages like retirement plans, health insurance, a consistent paycheck, and financial security. Safety is the employee's top priority. For the E quadrant mindset, the security of our regular income is more tempting than possible wealth that can come with a larger risk. Thus, the key concept for the E quadrant is that people earn money by working for businesses or government in exchange for a set sum, either on a wage or an hourly basis. Someone in this category can still earn 6 figures as a doctor, attorney, or executive. However, the constraints in this quadrant make it challenging to amass money in this area by yourself. The amount of pay that an employee receives is often beyond their control, since their supervisor determines whether their wage and whether to raise their employees' pay. They need help to enhance their income. A person group is solely responsible for providing for himself. There are only so many options to boost their income besides returning to school and looking for a better employment. Taxes. This category also includes fairly simple taxes. After taxes are deducted and employees' taxes are deducted, there is little an individual in this category can do reduce their taxes once they receive their pay. The most that can be done in this area is to postpone some taxes, like when money is placed in a retirement account. The tax burden for high earnings in this category can reach 40% S quadrant. The S quadrant refers to independent contractors or small businesses. At this point, a person decides to try their hand at entrepreneurship and generate income. S quadrant's person wants to take back control and be free to pursue a greater level of remuneration than they would receive from a job. They therefore decide to start their own business. Independence is the operative word for S sector. This category method of earning money still involves a changing time for cash, but not for a set sum. The self-employed trade its time for the potential to make money. People who fall into this category take more risks than those who fall into the first category, because there is no assurance that they will generate any money in this sector. Everything hangs on how well they can sell their goods and keep their word. However, just as a person in this category may not make any money, others may do so significantly. Taxes. This group has a bit more flexibility, but it all hangs on their capacity to sell and deliver taxes. People in this quadrant can write off businesses related expenses when filing their taxes. However, those that fall under this group are still responsible for paying state, municipal, and income taxes as needed. However, compared to the first group, self employed people wind up paying more in taxes, Medicare, and Social Security. It is also that the employer and employee can each pay half the tax when a person works for a firm. However, when someone works for themselves, they serve as both the employer and the employee, carrying both sides of the huge quadrant representing the big company. The game rules in this category are little different from the ones in the previous two, creating a setting where exponential development and wealth are easier to attain. B quadrant. A person in B quadrant believes they should use leverage to raise their income. In this area, the two primary types of leverage are frequently used: OPT and OPTM. OPT stands for others people's time and OPM others people's money. These people are interested in maximizing a company's performance, so they search for someone who can manage specific aspect of their company well. They can concentrate on self-employment and growth, and the schedule for the B quadrant no longer includes regular businesses operations. But at a fundamental level, a crucial word for the B quadrant handles the day-to-day course. However, large corporations generate revenue is comparable to someone's in the S quadrant. They must be able to make a sale and keep their word while providing a good or service. But in this area, scaling up is the aim. The business owner no longer trade time for a cash or profit. Here, the entrepreneur uses their time to develop a system that can efficiently manage the time and resources of others to increase the cash flow for the businesses. Additionally, this system and its investors must function without the entrepreneur's involvement. Once a business is an asset, this creates a cash flowing business. Many owners opt to keep it while employing a manager. Either go public, sell stock to other investors, or sell the company. Since self-employed firms that generate steady revenue are particularly desirable assets for taxes, the B quadrant works significantly differently from the first two groups. First, the minimum tax rate for corporations is 21%, and owners of these businesses frequently decides to pay themselves most of their earnings and divide dividends rather than a sizable salary. It is because wages are only subject to maximum tax rate of 37%, while dividends are only subject to maximum tax rate of 20%. To benefit from more advantageous tax regulations, businesses can also reallocate. Why do you think so many professionals in this business relocate to Puerto Rico? It is warm weather or the fact that Puerto Rico has no income tax, capital tax gains, or dividends income tax, only a 4% corporate tax rate. Debts in this category are treated somewhat like assets by firms due to the tax laws, can use debt to finance the expansion of their company at a higher cost than their real revenue. leaving them to declare a loss or even zero taxable income, which might then be carried over to lower subsequent tax obligations. Additionally, businesses can roll over all debts into new debt. It enables companies to postpone debt payments forever effectively because they can continue utilizing new debt to pay off all existing debt. Companies may also benefit from various credits and writes off. Since numerous tax incentives are available to firms, only those organizations can be very inventive. Example, Donald Trump is one of the wildest examples of violating the tax code. Trump made the rather insane decision to bury his first wife in one of his golf courses after she passed away, until you learn that this qualifies the golf course as a cemetery. All taxes and assessments on cemetery land in New Jersey are exempt. It indicates that the three different forms of taxes, property tax, income tax, and sales tax, were all removed by the single action that formed the tax. Quadrant I. The quadrant I, which stands for the investors, is where money is transformed into riches. The wonderful thing about the I quadrant is that anyone can become anything, regardless of their quadrant. The quadrant has a lot to give, but there are different ways that people can access the capital depending on their cost of entry. Some people use the money they make their employment to save and start investing. Others may be able to collaborate with someone who has the attitude of capital or find other inventive ways to get wealth. The I quadrant is separating time from money and amassing resources that generate income. Investors still spend time managing their investment and making decisions in many circumstances. However, the person's time is no longer needed because the production and preservation of which is in the aim of someone in this category. Although people can wealthy in the B quadrant, long-term prosperity can only be attained by becoming productive in the I quadrant. The I quadrant offers several opportunities for wealth creation, including typical stock investments, businesses, real estate ownership, private equity investments, and so forth. The three core wealth builders, however, are what investors want. Cash flow. Cash flow is the first. It is the income that an investor receives from their assets, such as ownership in companies that generate steady income or real estate that generates a rental income. The objective is to have assets that generate positive cash flow. Appreciation. Your second showing of appreciation is the increase in value and growth that an asset experiences over time in addition to cash flow. Your goal is to increase the value of your assets from today to tomorrow. It adds your riches and gives you leverage to exercise within the I quadrant. Taxes. The I quadrant offers many tax advantages that other quadrants do not. One of these advantages is that investors can tax-free increase their wealth to large levels. In real estate, there is something called 1031 exchange that enables investors to sell an asset at a profit and delay their taxes to utilize the money to buy other property. It only one of the most well-known example of this. Conclusion. Normally taxes are postponed until the sale of the following items. Still, many investors keep utilizing the approach and carry over their earnings from one larger asset to next without paying any taxes. Many investors who don't want to sell their asset can borrow money and use those assets as security to acquire other assets, allowing them to control them. It enables investors to tax-free growth their net worth. Even though Robert Kiyosaki claims that the I quadrant is like a playground for the wealthy and that understanding the advantages of becoming an investor is equally vital. What makes someone rich is learning how to invest.